And last night I said that be cautious because what's
Avi, are
happening.
you talking? I can't hear you if you
Can you
are.
hear me? Can you hear me?
Oh, never mind. Never mind. I'm dumb. I had my volume down.
Okay. Let me see if I could move my microphone so it's better. Okay. Am I good there?
Yeah.
Okay. So what I was looking at, and these are the things you guys have to pay attention to. Last night, when I said I was not really excited, even though a lot of FinTwits were excited that we're gapping up and it looks very green, I was not. Because when you pay attention to the chart itself and you look at QQQ, we had this downtrend over here. We're in this range. We are trading. We have rejected the 50-day moving average. We've had crosses and you've gapped down. A lot of times when there's a gap down in the market and price is retesting that gap, especially in any overnight pre-market or post-market session, there's very little volume that goes into these move to the upside. So that tends to create a what you call a bull trap. So I'm like, all right, that's exactly what I think is going to happen because you're coming up and you're retesting the previous day high as well, which is one of the levels I said to be careful with on both of these, and you had these gaps. So the market is going to tap liquidity. The market is all about finding liquidity to set bull traps and bear traps. The market is going to tap these liquidity, and these daily EMAs are going to act as some sort of resistance. So that is what I was basically focusing on, especially moving to the 1 hour and the 4 hour chart. You could clearly see, because this is where range analysis comes in very handy. You have to look at how, if there's any range, parallel range in the market, because the market is going to respect those ranges. And this is something we talked about, Javi, where we're looking for IFVG and FVGs. Those are ICT concept. We can go into those a bit more details in courses and so forth. And we have other sessions. Those are just fair value gaps. Um, so this gap, think of it like an IFVG. You broke down, you created a gap. The market is retesting that liquidity on very low volume. This is where volume price analysis comes in handy. Look at the volume in post-market and pre-market session. Do you see that? Nothing really is gapping up. Look, there's no volume, so there's nothing sustaining that move. So as you're gapping up into a gap, that's a liquidity pocket, you are retesting these EMAs, the 200 EMA, you're retesting the top of this range and you're retesting the previous day high. So you have a lot of confluences to say this is a better setup for a short position. And if price start breaking key levels like 750 and so forth, then I'm like, all right, it's breaking out. Let's see what it does. If it starts holding resistance, maybe I could go for a long position. But if you're taking this trade and you're tapping up here, let's look at market open. And I've always said when there's a gap up in the morning or a gap down, whatever the case is, pay attention to those gaps. Those are very high liquidity zones that a market love to come back and revisit. Now you gapped up, very little volume, and you had an open gap here in the morning. This was the pre-market gap that you had right here. Look what happened. You came at the top of the resistance. You pretty much check the box. Market makers check a box. All right, we tap the liquidity within this gap. We're right at resistance level at 747, right at the top of this range. Every time price gets to the top of this range, it sells off. Look, continue to sell off. So you got to pay it because the market, it remembers patterns. The market always remembers patterns. And you as a trader, your edge will be to remember patterns and look for patterns in the market. Top the gap, and it completely sold off. So somebody who's going into the market this morning, this here was your first, not your first sell, but on the 5 minutes chart, it's a 15 minutes close, very bearish 15 minutes close, by the way. This would be, if you continue, you could always draw a trend line. right over here. Look at this. This is why I said EMAs are also important. The first thing you do is test this EMA right here. And
Good
you broke this
afternoon.
EMA.
Good afternoon, boys.
Hey, how are you, man? So you've tested the EMA, and EMAs we're talking about. I think a better visual would be, let me use my indicator. Let me remove the drawings. Give me a second. It's going to load, guys. Okay, there you go. So this here is my indicator. Look at this going into pre-market. What did do you guys see that X right up here on my chart?
Yeah.
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 That's my indicator in pre-market telling you stay out of long positions. There is a huge bearish divergence that may cause a sell-off. Whatever is happening in the market, my indicator is printing an X, is telling me do not long the market. There is a bearish divergence. It's picking this indicator is analyzing probably 40 different data points at the same time. Our eyes cannot pick up, and it's printing a signal. And let me go back. And if you look carefully, this is where you had the cross. But look at this. Clean trend. Then you broke the trend and start rejecting the EMAs. You see that right here? Printed an X. Now you as a trader, you are waiting for price to break this trend and probably retest it. You've broken the trend, and this is where you retested it right here within this circle. Let me put that as, let me change it so you can see exactly what I'm talking about. Because a lot of times what happens, and this is something I need to do more courses on, there is the charting that I do. I analyze the chart. I give you guys the path I'm looking at, and a lot of times the path play out. Then after that, it comes the next stage that you have to work on is planning your trade. That, hey, if this happens, I'm going to execute my trade this way. People get to the charting, they get to the trade planning, but then they're not very good at executing. Or when it comes to executing, you need to have a strategy and you need to implement that strategy. So here's one of the things that has to do with executing a trade plan. We had clear, let me go to 30 minutes chart. Last night when I posted and I showed you guys clearly the range that we're in. We're at the top right here. We came up, we filled that gap. And now into pre-market, we're looking at the 15. For when I'm trading in the market, the charts that I have up is my 1 hour, 15 minutes, and the 5 minutes. 1 hour is like an anchor, so I know where the major resistance, support, EMAs, and stuff are. On the 15 minutes to 30 minutes, it helps me to gauge scalp trading or intraday trend, so I know where the market is heading within a larger time frame. So now we're gonna look at the 5 minutes again. Here's the 5 minutes from here to here. That's pre-market. My indicator printed an X here. We're in an uptrend. Very little volume in pre-market. We broke below. I don't like trading the break of a trend immediately. I don't jump. I like the retest. I want to see what the volume is doing at a retest once we break a major level, whether or not that's a price level or an EMA level. Now, once we've broken below that level, we came down, we retested all the EMAs. This is where you had the EMA crosses right within over here. See that circle? See how it changed from green, indicator printed an X? It changed from green to red. There's a couple different signals here. There's a short-term signal. Then there's a longer, the EMA. You see this yellow one here? That's one of the crosses. So you've had, if the yellow is below the red and the red is on top, those are just EMA. I could tell you guys every EMA this is following. I'll do a course on that. But everything now has changed bearish. We're now rejecting this yellow band that you see is below this red one. Price is below the red one, rejecting it. This here is a clear short setup. Where would your stop be if you're trading this? this is how I would short position. If I'm entering this at a retest and rejection, my stop would probably be above here. And I would probably just set my target right here. I know there's a lot more drop, but at least is a 3-to-1 risk to reward ratio. I would want to at least set my target at the previous day high. I will take profit here. This is my first take profit. That's 1.73 risk to reward. My next take profit be here. So if you're in multiple contracts, you're scaling out of your positions. You're not always holding your position. And I would take my next stop would be here at this band over here. That's how I would trade it. I would probably miss a lot of move to the downside. But if you have multiple contracts, you're scaling out, so at least you could hold runners. But the whole point is knowing when to execute. And the EMAs that I use, I talk about it. But you have to look when price is breaking or is rejecting. You have the first trend over here. That's your resistance trend. You have your trend up in a bearish sequence. When you're making lower lows and lower highs, you're looking for when price is breaking a trend to form a new low, and that's what happened over here. Broke it, retest EMAs right here, all the prices, rejection, and you jump into your position over here. I know looking at the chart what happened is easier to, it's like 2020 is easier to say, oh, you should do this and do that, but in real time it's much more difficult to analyze these things in real time. That's why you have to have some sort of plan to know what you're doing. So we're not, if we start breaking these EMAs and this trend, we're not going short. We're getting out of our position. So once we're rejecting this, we're shorting this. If we start breaking above these EMAs and this trend over here, we're out of that position. We're not holding it. You will have to take a loss if you're short. You're always going to have losing trades. You have to deal with it, but you have to have a plan of how you're trading. I will make this indicator available as time go on. Javi, I talked about it. I've been working on this indicator to make it even better because it does give some false signals. Like here, printed long, we had some upside, then we moved down. That's in post-market or pre-market. But let's clear that up for a second. But someone who's trading this, very clear short signal over here. Very clear short signal. This is where you're jumping into short. And you would have known this is a very good short signal. Look here, it dropped. Created that same bear flag pattern over here. If you draw a line again. If you go even under 2 minutes, you'll see it. Here, it tried to make new high. Got rejected by the EMAs. Broke again. Try to do the same thing here. Again. Rejected by the shorter EMA. And continue to trend to the downside all day. So this is a trending day, a bearish trending day. So this here is a strategy that I use a lot when I'm trading. I want to see what the larger trend is. Is it a trend to the downside on the hourly? And that helps me to gauge what's going on. It's crazy sell-off, man. Crazy sell-off. What a beautiful day to be trading shorts. Same thing here, daily. We know the daily trend is bearish because EMAs are crossed. We're below these EMAs. Look at that. And let me remove that. Let me add my indicator here. I have institutional indicator that I've created. I use several indicators that I've created. Let me use this other one. Here. Look at that. And pre-market, euphoria printed on the 5 minutes. Had an X on post-market. It's telling you stay the hell out of long position. That's what it's telling you. Got the cross and start selling as market opens. Clear signal. A lot of clear signals. If you're following this, you don't want to be longing this while you're below EMA crossing. So this is one of the strategies that I use. I don't long. I try not to go long when trend has turned bearish. So this is some of the strategy I think we need to work on, that I need to work on with you guys and teaching how I look at the market when I decide to enter short, when I decide to enter long. I'm always going to get things wrong. But the whole point of it is that you have to have a strategy that you can follow that gives you more winning trades, than losing trades. Same thing here. Rejected. This is QQQ. I want you guys to understand it's following the same pattern. Look. Same pattern. You're looking for patterns. Where is price rejecting? Price rejecting. We had a cross. Broke. Below. Remember, I don't like jumping into a position at a break of a trend. I like to enter position at a retest of a trend and watch the volume. We had a break below. Drop. I'm not entering here. I want to see that retest and rejection. Had to retest twice and rejected the EMA cross once it turned bearish. That's my entry for a short position. And my stop would probably, I could either set my stop above this level or above here. This is very far to set your stop, but I could just set my stop right here because I could always jump back into the position again. And pretty much that's how I look at the whole market. You're pretty much looking, this is A+ setups. When price is trading below the EMAs and you're having bear crosses. If you don't know what a bear cross is this right here. You're breaking below, retest, drop. You're pretty much breaking below trend, breaking below EMAs. These are the things you have to look at in the market. Do not wait for somebody to send you an alert. Learn these things, and you can look for these things yourself when you're trading in the market. I'm not sure if this was helpful for anybody. And this goes likewise when it comes to bullish pattern as well. It goes the same way. All right. Let's. Any questions anybody have? Anything you want me to look at? Tesla still following.
Very helpful. Thank you, Abby.
Yeah. Oh, you're welcome. You're welcome.
Thank you so much.
You're welcome. So
It
when you're
was a good day. I'm struggling with letting the runners run, man. That's my problem.
yeah, so I think one of the best ways of letting your runners run when people are struggling, what really helps is if you're jumping into a couple different contracts, you got to make sure that you're following your risk management. If you are not, if you are there shaking, you're sweating, you're trembling while you're in a position, you're over leveraged. That is how you got to pay attention to how your body's reacting every time you jump into a trade. Every single time I jump into a trade, I ask myself a simple question. If this trade goes to zero, does it ruin my day? If the answer is yes, and if it destroys my account, and if it makes me very nervous, I'm over leveraged. So I need to leverage in that position where I always leverage as if that position is going to zero. Like I'm losing all my execute all the money that I'm trading on that exact trade. So I always size down for zero. And if I'm in 5 contracts, the way I will let runners run is that I will start scaling out my position at 20%, 30%, 40%, 50%. And if I'm left with 1 contract, now, if it's a trending day, I leave that trade to trend. If it's below the EMAs, like here, for example, if we are trading below, even in SPY, if we're trading below the EMAs, I leave that 1 contract to continue to trend as long as rejecting EMAs or until we fill this gap or something like that. I just leave it as long as resisting all the EMA, short-term EMA band or long-term, the more 5 minutes, 2 minutes, whatever band that you're using. This is the one I use. This is the 5 and 8 EMAs you're seeing here.
Which one you're using? 5 and what? The yellow
So
line is the 5?
yellow one, that's the 5 and 8 EMA crossing.
Mm-hmm.
I think that's the one I'm using. Let's see. So that gives you short term. So you're able to pick up when a trend is changing very quickly.
Mm-hmm. That's well. I'm playing SPX and ODT, so
Yeah.
So 5 and 8.
Mm-hmm. I'm using the 5 and 8, or the 5 and 9 doesn't matter. 5 and 8, 5 and 9, anyone. That's the short term EMA band you're using. And the other one that you're looking at here, that's the 13, 30, and 50 EMAs. I find the 13 and the 30 a better EMA to use.
Mhm.
Yeah.
Got
So
it.
we're going to do more in-depth courses on these, on how I execute my trade, what I look for to execute, such as looking for momentum or price trending to the downside. Then you go look on the hourly, then look on the 15 and 5 minutes. Is price creating lower highs and lower lows? Then I look for bear setup like what you see here. Let me remove my indicator. Then I look for these bear setup that you see here, where price breaking, retest below EMAs, and the trend to the downside continue to hold. That's a short setup to the downside. So you're scaling out and you have one of your, you're just holding one of your position that you have, and you make sure you set a loss where you're not, you're still gonna stop out at a certain point where you're still in profit for that runner. So even if that runner goes, you don't want that runner to go to zero, but you always have a stop where that last runner is still going to be in a profit, or at least
Got it.
most break even. So you're just trading with profit at that time. Yeah. Hopefully that was helpful.
Yeah. Thank you. Appreciate it. Thank you.
Yeah. All right, Javi. Thank you guys for being on the call. I'm gonna try to do a bit more of these. Before I go, let me see if yeah. Let me see if there's anything else I can go over. Nah, nothing else really. I'm just going over the index right now, just to give you guys, the whole point of this one here is just to give you guys like a strategy to look at when you're trading. Things to look at. That I look at gaps, fair value gaps, and IFVGs, inverted fair value gaps. All right. That's it for this session. I just want to hop on here really fast and just go over those things for when you're trading. So use these EMAs. They're very helpful. The 13, 30, 50, and the 200 EMA. There is an EMA band that you could get.
The EMA ribbon, that one that you just
Yeah, the
showed.
ribbon. I prefer to use that one because I'm not adding 4 different EMAs on my chart. Let me see.
And the 8 and 5, we can add it on the
Yeah,
same one,
look,
on the
moving
EMA
average
ribbon.
ribbon. That's the one I'm using.
So we can select 2 indicators like that, and
4.
we
You can
put
select
5
4.
in.
You can select 4 different EMAs. So I use the 13,
Okay.
30,
Yeah.
50, and 200.
Mm-hmm.
So
Got it.
what I like about this as well, when you go to settings, if you don't want all of these on your screen, you could uncheck which one you don't want, and it'll just show you the one that you want to keep on your screen. That's what I like about it. So I use that one.
Got it. Mm.
Yeah. All right.
Yep. Thank you so much.
You're welcome. All right. Y'all take care and enjoy the rest of your day. I got to go continue building the website now. Let me see. All right. I'm excited to show you guys when I'm working on a website, when I have a more finished product. Lots of educational contents and so forth are working on. All right. Y'all take care.
Hey, Javi.
Thanks,
Yep.
Hey,
Javi.
Javi.
Hey,
Quick
Javi.
question. Hey, I'll say, what time you think you'll be available? Around like your time.
I'm gonna head up to the gym maybe around 3 o'clock or so.
You're still gymming?
I started gym 2 weeks ago. So
Dang,
I'm
you're
gonna start gym 2 weeks
consistent
ago.
now.
So I'm available either before the gym or gonna be after the gym. So you choose.
I'll probably say probably after your gym.
Hmm.
So your 3 is for you. I think you're an hour ahead, correct? I'm
I don't
central.
know, but maybe.
Uh, I think you're an hour. Yeah, I think you're an hour ahead. Yeah, I think after your gym probably better. Cause I'll probably be home like 5 or 6 central time.
Okay. If I get to the gym for maybe around 3, take me about 2 hours, get back home here, shower and stuff, maybe 5, grab
Oh
some
yeah, that
dinner,
probably be
have
plenty
a
of time.
kid, 6. Then I get on the computer, start charting and so forth.
Yeah.
So yeah, we could either talk while I'm charting or before or something.
Yeah, that's fine.
All right.
I think after the gym's fine, or after you're like done with everything, like showered and stuff, that'd be fine. If you give me a buzz.
Okay, cool, man. No problem. All right,
All
bro.
right, man.
So we'll talk
See you, bro.
again.
All right.
Take care,
Later.
guys.
Take
Talk to
care.
you
Thank you
soon.
guys
Bye.
for joining. All right. Appreciate it.
Yeah, no problem.